Hello, it's Min here. Today I want to share with you a story from my own investing journey. In my 20s, I thought I had investing all figured out. With 2 engineering degrees and a scholarship, I was very confident in my ability to make the right decisions. So I did what many investors do. I chased high returns, the hot stocks, market timing, even options trading. I was very busy doing all these things, and I realized I was constantly stressed out and making emotional decisions all the time. And worst of all, losing money. I remember during the global financial crisis in 2008, a high-profile company stock was in free fall. I saw an opportunity. I bought in at a fraction of its original price, and I was proud of my bold and contrarian move. I imagined the millions I would make when it rebounded. But it never did. It kept falling until it went bankrupt. I lost everything I put in. That was my wake-up call. I realized I wasn't investing. I was gambling, hoping for high returns instead of following a strategy. Many people think that to build wealth, you need to chase high returns. They think, if I can just find that one big investment, I'll get ahead. But the reality is, people who actually build wealth don't do it by making one big win. They do it by staying invested and letting compounding work. Let me show you what I mean. Albert Einstein called compounding the 8th wonder of the world. It's truly magic. Imagine you can invest only $15 a day with a return of 8% per year. $15, that's about 3 cups of coffee a day. And now let's imagine you can start this investment at the age of 18. And by the time you reach 65, that's 47 years later, you would have put in $240,000 of your own money. But because of compounding, how much do you think you will end up with at the age of 65? $500,000? $1 million? Well, because of the power of compounding, your money of $240,000 would have actually increased more than 10 times to $2.5 million. Now, what if you delay this investment by about 10 years? Let's say you start this investment at 28. How much would you have at the age of 65? It's more than halved because you have 10 fewer years of compounding at work. What if you delayed by another 10 years, starting at 38? You will end up with about just under $500,000. Now, what this means is this is why starting early and staying invested is far more powerful than chasing high returns. Now, if you feel like you've missed all the investing times, don't despair. Let's have a look at it the other way. Let's say we want to get to $2.5 million. Let's look at what we need to do. We already know if we start at 18, we only need to put in $15 a day. Now, if we start at 28, that's 10 years later, although we lost 10 years of compounding time, what we can do is to make it up by investing more. So instead of investing $15 a day, we put $35 a day into our investment. Now, that's still very reasonable. That's about $1,000 a month. What if you are 38, you want to invest? Well, you need to put in about $80 a day. Now, that's about $2,500, okay? A lot more than if you started at 18, but still manageable if you understand the power of compounding and want to start an investment program now. So I hope this gives you the idea that you don't need to have one big win to get ahead. You just need to take consistent small steps in investing. What I've learned both as an investor and a financial planner is this. It's not about the highest return. It's about the return you can stick with for decades. The real question is not how do I get the highest return? But how do I invest in a way that allows me to stay the course? Because consistency beats luck every time. Investing is not about chasing the highest returns. It's about building a strategy you can stick with for the long run. So if you're ready to take the guesswork out of growing your wealth, let's talk. Click the link below to book a free 30-minute call, and let's map out your next steps.